Hello everyone, welcome back to the channel. Fund Inspector here, currently in Hoi An in Vietnam. This week we're going to look through the ARC Innovation Fund managed by Cathy Wood. She's probably one of the most well-known fund managers probably in the world at the moment, and this fund, the ARC Innovation Fund, is one that a lot of people really like, and it's one that a lot of people really do not like. There's question marks over it. What is that phrase? It's a little bit like Marmite. You either love it or you hate it. And the fund inspector is going to share his own views on that in this video. Anyway, first of all, like, subscribe, all the usual social media nonsense to try and grow the channel. So if you could do that, that'd be very much appreciated. So, been in a few places since my last video. And I'm going to just share some pictures now, so here you will see some of the things I have been up to. Alright, enough of that. Let's just get on to it. Let's get on to this fund review and let's talk investments, baby. As mentioned before, the ARC Innovation Fund, right? So it's actually an ETF format, right? Just don't really worry about that at the moment. I'll maybe talk about that when it comes to the costs of the fund. But let's just do the ratings card this week. So first of all is the Barrowlands Ballroom in Glasgow. It's the most iconic venue in Glasgow, arguably the United Kingdom. Been to many gigs there over the last 10-15 years, and honestly never disappoints. If you've never been, get yourself there, see a band, and it's a must if you're coming to Glasgow. The second good rating is a good old can of Pepsi Max. I have been drinking loads of Pepsi Max. I might have a Pepsi Max addiction, I'm not sure, but I'll tell you what, I love a freezing cold can of Pepsi Max. Third one is okay, is Eggs Benedict. Now, over here in Vietnam and in Thailand, they obviously in the breakfast menus try and replicate some of the sort of Western dishes to appeal to that sort of vast tourism market. And for me, they just don't hit as hard as back home, so they're okay. But I would give it a really good or an excellent rating if it was like back home. 4 bad. Now this is arguably terrible for some people, is Hampden Stadium. Now, the only reason I'm giving it a bad rating instead of a terrible reason is because at the couple of concerts I've actually been at Hampden, and I'm not talking about this just from a football perspective, have been really good. Seen Jerry Cinnamon there, it's probably one of the best gigs I've been to. So for a football perspective, but it is horrific. You're too far away from the football pitch. There's no atmosphere. Honestly, you're better just watching the game on the television at home. Hampden has got no atmosphere, and they should really look at reconstructing it. They should really try and reconstruct it so that fans are closer to the pitch and there's a little bit more atmosphere. And then the last rating, actually a funny story in Hampden. I went during the Euros in 20, when it was the one after COVID, where they had a couple at Hampden, a couple at a lot of different cities in Europe, and actually managed to get in the ballot, and I won tickets to see a last 16 tie. So I was like, brilliant, going to go and see Spain versus England or Portugal versus France. Obviously Scotland weren't through because we weren't good enough, and all but like expecting all these big names, and who do I get? I get Sweden versus Ukraine in a Wednesday night, freezing cold, and to add insult to injury, it was 0-0, extra time, 1 or 2-0 Ukraine. It was horrific. Honestly, the worst football game I've ever been to, because obviously there was social distancing as well, so that atmosphere was even worse. Anyway, that's enough in my Hampden stories. Terrible, right? Honestly, the worst movie I've probably ever seen in my life. The Joker movie. the second one, sorry, the first one was really good. The one with Lady Gaga, the musical with, honestly, horrific. That's the only word to describe it. Anyway, let's get on to the costs of the fund. 0.75% over the last for a long time. The fund's actually got down in size a lot because you'll see in a minute because of the performance. Still, but Caffey's taking in $50 million a year on this fund for and it's not really an ETF, right? Because it's not an exchange traded fund. It's like a tracker of an index, right? 0.75 is okay. It's reasonable. So I'm going to give it an okay rating. In a wee eggs Benedict. It's kind of misleading, that ETF, because it isn't. It's an actively managed fund, but that is like it's an exchange traded format. So normally you see ETFs down at like 4 or 5 basis points, because it's tracking, for example, the S&P 500. But she is actually actively managing this fund, so it's slightly different. Okay, right now on to the performance benchmarks, the S&P 500. So over the 1 year, it's been good. So I'm going to give it a pretty good rating. So it gets a Pepsi Max. Reason for that, as you'll find out when I go through the assets, is the growth assets have done pretty well over the year, and there's a couple that have done really well for her. Now over the the medium term, 3%, minus 5%, and 41%, right? So let's just put this into context, everybody. Cafe has received, let's say this fund was consistent at 6.78 billion, right? So he's getting 50 million a year. Slightly not the case, but she's still getting probably at least $150 million to ARK Invest, right? She's lost 5% on that, and she's making $150 million. Whereas you could have had that money in the S&P 500 that is basically costing absolute pennies compared to that, and you would have made 40% return. So it just shows you that fund management can be one of the only forms of, a career path that you can be really bad at it and be like Caffey's probably got, I don't know how much money, hundreds of millions of dollars, and as you can see here, she's been pretty poor. So I'm going to give that, it's not even a bad rating, that's a terrible rating, I'm sorry. And then over the long term, again, look, you're getting 80% return in the S&P 500, and you're getting 4%. I mean, you would have been better just having this in the cash, with no risk. That is horrific. And like I said, she's probably made hundreds of millions of dollars off of this. I mean, it's unjustifiable, to be honest. And if I was an investor who'd put, a lot of these guys who have got the money in this fund aren't like the Joe Blogs that are putting 10 grand in. Like, some of these people are probably putting in like hundreds of millions of pounds, and getting basically no return on it. Alright, so that's my rant over in the ARK Invest Fund. I think you can see where I'm leaning to on this about do I love it or do I hate it. Right. Always a red flag when I see Tesla as a top holding. I'm actually going to talk through that. So Tesla, obviously Elon Musk company, it's now $1 trillion. Probably one of the companies, it's not really, I know obviously it's with the cars and stuff, but it's now kind of went down the AI route, and it's more of what I would say is like a tech name, not a car company. And if I look at the chart on it, it's been good over the 5 years. It's up 462%. So it's actually saving the ARK Invest Fund. That would be even more. That'd be even more horrific if she didn't have like Tesla in it. And you can see it's had a good year, right? And that was because obviously Elon Musk is getting involved with the US government. A lot of people reacting well to that. Basically, silver lining his own pockets. What he's going to do in the US to basically increase his own personal wealth. He's already the richest guy in the world, so obviously he wants to be even richer. But anyway, 166 over earnings, extremely overvalued. It's not a $1 trillion company. It's one that I would say is probably like 600. I think this could. It's like 50% probably overvalued. That's my own opinion on that. I wouldn't be buying it, and it's not because I don't like Elon Musk or like I don't actually like. Personally, I'm not a big fan of like Tesla cars. I think the valuation on it's a bit high. So, I mean, right, let's be honest, my own personal rating on this is probably a bad, but it has been a good performer. It probably still will do well, not based on any sort of finance theory, just because of Mr. Musk and the way that people react to some of the things he says. So I would not have a short position or a long position in this. I personally will not touch Tesla at all. So I'm going to give it it's an okay rating, but it's been a good performer. But I think for the long term, nah. Roku had good earnings. She bought into this. I think it's now at like $90. One that Kathy had significantly higher than that. It's a streaming service, so it's been okay. Coinbase. Now, to be fair to Kathy, she did get into this one quite early. It has dropped a little bit. It was up at over 300. I think it's now down at 230. It's been good, and she's got into that one nice and early. So fair play to her on that front. Roblox is the sort of the gaming platform. Not a big fan of it. I think it's well overvalued at the moment, so I'm going to give that a 4. Right, Palantir. So this is the AI company that has basically went from $6 up to about 120 now. I think it's dropped now to 100. I called this one ages ago. I had it in my own personal portfolio. I sold off a lot earlier than at 120, but I took profit on this when it got to about 50. So I missed out on a big bit, but I did get in nice and early there, so I still made good money on it. And I still think the valuation now is a bit nuts. It's about 500 or 550 over earnings. That will pull back, I think, back down to maybe like 75. But a lot of people are really bullish on it in the long term. It's a good company. I really like it. So I want back into it if it drops a lot. So I'm going to give it a 3. Robinhood's been an excellent performer. That's definitely a good one too. Ironically, but Robinhood was the company that was involved in the GameStop saga, with Citadel and Ken Griffin basically doing all sorts of dodgy things on freezing retail investors able to trade on the GameStop, so that a lot of his mates could get out of the position. Anyway, Shopify's been a great performer. Really like it. It's a 2. Crisp, I don't know enough about. Block is one obviously in my portfolio that I really like. Bad earnings, but I still am bullish in this, so it's a 2. And I don't know anything about this one, Tempest AI, but it's another AI company. Now, you're probably looking through this and say, "Oh, Jamie, you've basically slagged off the ARC Innovation Fund, but you've gave a lot of these things like good or like okay ratings." Now, that's not really true, right? Because I do like a lot of these names, but I do think a lot of them are overvalued at the moment. What I would say is the performance up here isn't truly reflective of these assets, right? Because Kathy's had so many companies in these holdings that she's just sold off, and it basically covers up for like how bad they were, right? So for example, there was one called Teladoc she had a good weighting in it, and it absolutely tanked. It went down to like next to nothing. I think it was up at like $300 or $400, and it went down to like 20, and she had held for a vast majority of that. So a lot of the numbers that are built into her performance are actually based on stocks that she now doesn't have. And although I do like a lot of the holdings at the moment, if I go through them all one by one, right, and I just say overvalued, okay value, or undervalued, then you'll probably see what I'm coming at. So Tesla overvalued, Roku okay value, Coinbase probably okay value at the moment, Roblox overvalued, Palantir overvalued, Robinhood okay value, Shopify okay value, don't know about that one, Block's probably now at an okay value, and Tempest AI, I can imagine that's watch this, right, if I go into Yahoo Finance, I bet you Tempest AI is just mental. Tempest, right, let me just have a look. Okay, right, so if I look at the chart on this, come on, right, so it's up 70% over 5 years. Alright, so it's actually not even got a price in it, it's still negative. It's not making cash. Alright, not making cash. So, a point being is that's got a valuation of £10 billion and it's not made any money yet. So, question marks over the valuation of this one as well. Anyway, that's the fund review done. Overall rating for the fund, right? Sorry, but the past performance has been horrific. 4. The only reason I'm not giving that 5 is because I do like some of the names currently in the portfolio. So it could be a way to get in to try and cover a lot of these names. Maybe not put a big weighting on it. What would I have in the portfolio? I'm not a fan of it, but I would probably stick about 4% in. Anyway, that's the fund review done this week. Like, comment, subscribe. Anything else, let me know. I've been the Fund Inspector, and keep talking investments, baby.